having a great day. I want to thank you so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Scott Kirshner. 419-794-3030 is the number. Once again, that's 419-794-3030. Online, americasretirementheadquarters.com. My name is Chris Swan. On today's show, how to turn this crazy market into an opportunity. We've got some ideas on how to get involved in cryptocurrency and traps to watch out for, the dangers of getting your financial news from social media, and more. But first, before we check in with the guys, before we jump into the show, often on the show we'll have guests. Chaz Price has been on the show pretty often. Jeremy Baker has been on a few times, and I always preface that by saying no relation to Nolan Baker. But our guest today, very much a relation to Nolan Baker, Andrew Baker, who just finished up his first year of college and has been working at the firm for the past 3 years. So, guys, all of you, Nolan, Scott, Andrew, welcome to the show. Thanks for joining us. How you doing today?
We're doing great. It's actually Andrew's birthday today, too.
Oh,
so
happy
not
birthday.
only birthday, but making his radio debut. So hopefully share some good knowledge. And, today's topic, we're going to be talking about the cryptocurrency market, something that Andrew's actively been involved in. And, we'll be talking about college, too. So, for those of you that are parents or grandparents that are out there that, maybe have a graduation coming up here in the next couple of weeks or a couple of years down the road, we'll be sharing some strategies and ideas to do that. But also, one quick announcement, so a little bit of an investor alert. So anybody who's been following along over the last couple of months, we've been talking about the incredible opportunity that's offered by the U.S. Treasury Department. Savings bonds, again, the Series I savings bond directly from the United States Treasury Department. The rates are updated now. So the current savings bond rate from the federal government is 9.62%. So again, anybody who's looking for some safe alternatives to this crazy world in the market, and you're looking for a 9.62%, that's a rate backed by the full faith and pledge of the United States government. You can get that directly at the U.S. Treasury Department. So if anybody needs help on that, just reach out to our office. We'd be happy to help. Make sure you take advantage of that 9.62% rate on the savings bonds.
Yeah, we're Andrew. Just so you know, we're not going to sing "Happy Birthday" later. No, we might surprise you with that. So welcome aboard. We're glad to have you on.
Reminds me of my days waiting tables. People are like, "Oh, it's their birthday." I was like, "Oh, I don't sing. I don't sing." So I promise you, that's my gift to you. I'm not going to do that. But yeah, welcome to the show, Andrew. I know you and your parents, they spent a lot of time getting you prepared for college. So let's talk a bit about ways that our listeners can help their children and grandchildren get ready for those future college expenses.
Well, I would say, from dad, my perspective, really since the time the kids were born, we had started to kind of prepare for the moment of time that's come out. So one of the most popular vehicles that are out there for college savings plans are called a 529 plan. So for those of you who are a parent or a grandparent, that may be something that you'd want to take a look at, a 529 plan. What a 529 plan is, it's a plan that's offered, and each state has a little bit of a variation on it. In Ohio, the 529 plan is called the College Advantage. And really, when you open up the College Advantage Direct Plan, you can choose from what's called ready-made age-based portfolios, or you could choose risk-based portfolios, or there are some individual investment options you can choose based upon whatever somebody's preferences are, their goals and risk tolerances. The choices offer some benefits tax-wise. So if the money's used for higher education expenses, it can be able to pull out and provide some tax benefits for you. And then also here in the state of Ohio taxpayers can deduct contributions up to $4,000 from their Ohio taxable income per beneficiary per year with unlimited carry-forward contributions. And so I think, Andrew, you were only 3 weeks old at the time when we opened up that account, and we stuck to it and contribute into that account over the years. And of course, we know for the lion's share of the last 10 or 15 years, the market's been pretty healthy, and it grew to a good balance. One of the things, though, I think that a lot of people don't realize is that at a point when you get to be, a senior, you end up applying for what's called FAFSA. So FAFSA is the financial aid scholarship application. And, part of the disclosure is inside of there is talking about any money that you have set aside within a 529 plan. So believe it or not, the government does some dumb things, in my opinion, right? Right? So here we are, right? So you've taken a responsible step as a parent or grandparent and put money into a 529 plan to help one day if that child goes off to higher education. And because of doing that, that actually hurts their FAFSA eligibility for scholarships and grants. So, what's a positive sometimes turns around and can be a negative too. But Scott, I know that you've also got kids and
Yep.
that age range. So, what are the type of things that you've been doing?
Well, Nolan, as you, when my children were born, I started right away putting in and creating the 529 accounts for them, and I personally, I've got my daughter graduated, as you know, a couple of weeks ago, and I can't tell you how important it is to actually prepare for this before you get to that senior in high school moving into college, because you want to make sure you have all of that put in place. And you're right, the FAFSA, I mean, we had to fill out all of those forms, go through the whole application process, and ask all those questions. But I think the 529 plans are really, really awesome. But I will ask you a question, Nolan, on this. What happens? So I have 2 children, and a lot of people out there have 1, 2, or many more. What happens if you get a child that has a scholarship offer and maybe even a full ride, and you've been putting money aside? What happens to that money? How do you handle situations like that?
Yeah, sure. So, I mean, the definitions of higher education are pretty broad, so it's somewhat flexible. So maybe they don't need to pay for their actual school expenses, but maybe they need to use it for room and board.
Sure.
Maybe the books, maybe the computer. There are some flexibilities. You can also change beneficiaries. So in this case, Andrew has a younger brother still in high school. If Andrew didn't use up all the 529 plan, we could change that. Dad's always wanted to get his pilot license, so maybe at some point I could do that. But, again, at the end of the day, too, worst case scenario, you ended up cashing out that account. It's still your money. It just ultimately could be a taxable event.
Sure.
Based upon cashing it out and not using it for college expenses. So, with one of the drawbacks being that money counts against you when you're using the FAFSA eligibility, what I begin to try to educate people is, are there smarter ways and better options? And again, everybody's situation is unique, but we try to think about the things that are not countable assets, right? So, for example, grandma and grandpa, for those of you grandparents that are listening, you're removed from the FAFSA eligibility. So as long as you didn't put that money into that child's name, they don't have to disclose that money. So, maybe grandma and grandpa want to keep that money set aside, and then they could be more intentional about how they do the gifting and things like that. The other things that parents can consider is a Roth IRA as an example.
Right.
Now, with a Roth IRA, you have to be have it open for 5 years or be over the age 59 and a half to avoid paying taxes on the profit. And one of the things, though, about a Roth IRA is you can take the money that you contributed out of the Roth IRA at any point. And then if you look at what one of the exemptions to the 10% early withdrawal penalty, higher education is. And in addition to that, a Roth IRA is considered a retirement account, so none of the money that mom and dad have to be disclosed within inside of a Roth IRA.
Right. And we've talked about that with the health insurance, with the income based on income. Roth does not count as countable income when it comes to a premium tax credit. You asked a question, and we were talking about the 529 and some of the things there. I'm going to throw this at Andrew here. So one of the things that I remember with my daughter is she had the meal plan. And one of the things with the meal plan is, you pay $2,500, and your child gets to get money from the cafeteria by swiping a card. Well, I don't know what you did your first year, Andrew, but my daughter never used it. She was playing softball. She never used it. And I was always getting that phone call, Dad, can you put $100 on my account because we were going to Taco Bell, or believe me, I don't want to know half of what they did at school. I'm sure we don't want to know that stuff either, do you, Nolan? But do you find that you run into situations where you're not able to run right to the cafeteria, swipe your card? Do you do a lot of spending outside of the school?
Yeah, I would definitely say that I did spend a lot outside of the school. The main reason that I ended up spending a lot outside of just the school plan is the amount of food options. It was mainly eating Panda Express every day, or the dining hall's food wasn't the greatest for the day, so then I'd end up going and buying something with DoorDash or somewhere off campus where
Sure.
it would just was better food.
Yeah, and you know that's what my daughter said all the time too. You know, so one of the things I guess I would tell the parents and the grandparents, it's one thing to put money into a 529 plan and to pay for the higher education. There's a lot of little bitty auxiliary expenses that come up. That first year you're living on campus and you've got your room and board, you've got your books, you've got a new computer. You might need a new computer, things like that. All of these are things that are part of the education process, right? But then there's a lot of things in that second year, and this is what I really found with my daughter. Her second year, she moved off campus into an apartment. And then her final 2 years, she actually rented a house with 3 other girls. And you had your utility bills, you had your cable for the internet, and a lot of those things are not covered under any assistance that you would get for the for a through school if you get any kind of a grant or anything like that. So these are all things that you are going to incur on your own. It's nice to put that money away in whether it's in a Roth or whether it's in a 529, but you can use it for all of that type of stuff.
Yeah, definitely have some flexibility on different choices. And a third choice, if you're looking, again, planning ahead, one of the other things that is a missed opportunity sometimes is what I would consider cash value life insurance. Mm-hmm. So again, one of the things I did for Andrew when he was about 6 years old is we had made a one-time deposit into a cash value life insurance policy. Sure. And, what that policy did is allowed him to participate when the stock market went up, but it was protected against loss when the market went down. And so now, flash forward again, 12, 13 years later, that policy has grown, obviously, to a substantial amount. The other thing that I like doing that is, what I did is I protected his future insurability.
Absolutely.
I mean, I remember as a young kid, my wife and I, we've been together since she was 14. So, early on in college, we were together, got married, then started our family. I know as a young child, as a young adult, I should say, that, I didn't have money for things like, life insurance when I was a young kid, but having that put in place for him, not only, again, was a way to set aside money that didn't have to be disclosed on the FAFSA form, but also if he chose to keep that at some point down the road, hopefully a long time down the road, if he,
right.
gets married, starts his own family,
Sure.
Then he already has the insurance that's taken care of and paid for if he doesn't cash that out and use that. So we've also had a lot of clients that have looked into that solution too as another good alternative.
Now, one thing, Nolan, that does is you purchase that. It's called cost of insurance, and cost of insurance on someone a year or less old versus someone that's 25, 30 years old. Totally different. So what that allowed you to do is that one-time deposit you made, the cash value started working immediately because the cost of the life insurance was so low on someone that age.
Yeah, so you have a lot of the cash was going to work in the investment component.
Exactly.
Absolutely right. And so now let's that's some of the long-term planning. So again, if you have young grandchildren or young children, there's things that we can help with and solutions and ideas that we can set in place for you. But then let's fast forward, maybe talk a little bit more about those of you that are like, oh my gosh, my kid's graduating next week and they're going to college, right? So what I would refer to that as late stage college planning. So for those of you that are listening that are falling into that bucket of late stage college planning, again, the first thing we need to do is go back to looking at what the FAFSA eligibility is. So again, when you're filling out the FAFSA form, there's going to be certain assets that you need to disclose and certain assets that are not required to be disclosed. So what you can do is, first of all, you want to calculate your family's expected contribution. You want to identify any financial cost reduction strategies. Also, identify scholarships. There's a lot of different scholarships that are available out there. And then before you complete the FAFSA eligibility, I think it's important to talk with somebody who's, a college planning specialist. So here at our office, Jeff Boron is somebody that we have a relationship with that just really specializes in late stage college planning. He is a certified college planner, and this is an area where he can kind of help guide people through and talk about ways to kind of reposition assets from your left pocket to your right pocket. Give you a perfect example. We have a client, and her daughter was getting ready to go to college. She had saved up a pretty substantial amount of money in her checking and savings account that she was going to use to pay for the college expenses. It makes perfect sense, but again, by her saving that money in checking and savings, she had to fully disclose 100% of that money, and then the money was used against the eligibility for the child to be able to get scholarships and grants.
Yep.
But what we did is we took and we repositioned that money into cash value life insurance. And we picked what's called a liquid life insurance policy. Again, so it's something that she was able to get access to and has some liquidity. Of course, you got to understand all the ins and outs of whatever policy that you have and taxes. But in this case, we chose a policy that was very liquid. But by doing that, she now did not have to disclose any of that money and ended up making her daughter to be much more eligible for those opportunities to get scholarships and grants. And then something else I think Andrew and I, that we've talked about. So when I graduated from Bryan, Ohio, I went and I joined the Marine Corps and I served in the reserves and I got the Montgomery GI Bill. And at that point, I think, I would say that the Montgomery GI Bill roughly paid for about 60% of our higher education expenses. And I know, Andrew, you and I have looked at some different opportunities. Maybe talk a little bit about, what you learned from military service.
Well, I was looking to join the Air National Guard at the 180th here in Toledo. And just one of the things with the Air Guard is they have a lot of benefits with paying for your college. You get your GI Bill, and you get a lot of experience as well outside of just serving. You get to go on all these deployments around the world and around the United States to get a lot of this experience. And those were all benefits that would benefit me for my college. Like I said, it paid for your college. And then I ended up not going to join mainly from the current leadership and world conflicts, as I thought it'd be more beneficial for me to just stay here in the United States and attend college.
Yeah, and that makes a ton of sense. I could see some concerns with our current leadership too.
Yeah, absolutely.
Maybe that would make sense. But again, military service. I think service to our country is something as a veteran-owned business. It's a great opportunity. We've got some wonderful men and women serving our country. So first of all, thank you for those of you who do serve. But if you have a child that's interested in that, whether it's the 180th, the Marine Corps Reserves, there's a great opportunity to do some stuff. I was an electrician in the Marine Corps, so I always knew that I wanted to be a financial advisor. But by being an electrician, got me some a little bit of trade to be able to fix things around the house and kind of like Tim the Tool Man some days, if you will. The other area I think that was interesting is for small business owners. So if you're a small business owner, pay attention to this one. So if we look at it, I've been blessed in the fact that our business has been very successful here at America's Retirement Headquarters and has grown. And so, my tax bracket is pretty darn high. It could get worse, obviously, in the future, but I still look at it as my personal tax bracket's high. What I was able to do is actually able to hire Andrew and come into the business, and he was able to work here. I was able to give him money. And then what Mom and Dad did is we allowed him to use some of that money for his allowance and his fund money. And then we took a large chunk of that money and set it aside in what we identified as his college account. Now, then he was able to file his own taxes, and because of how we structured the amount of hours he was going to work and what his pay was, basically, almost virtually wiped out the tax bill on that. So instead of losing half of the money by it going into my pocket, me paying taxes and putting it into the savings account, I was able to put him on payroll, redirect that fund to him, and really eliminate that 50% tax. So small business owners, there's some strategies that we can talk about in your situation that make sense. Now, what ended up working out is here Andrew is 3 years later, right?
Right,
You know,
absolutely.
so he found a love for this business, which I'm super blessed as dad to have somebody follow in my footsteps, and at Bowling Green State University, majoring in business and finance. So it's going to be some fun years to go, but again, that ended up being some great tax benefits along the way too. So a lot of different things. And the final point that I would say as we're talking about college is make sure that you match up your child with the right college, not only from a career standpoint, but also what is offered from scholarships and grants.
Right.
Because different schools have different scholarships and grants based upon what people are looking at. I know when we went around and we did the campus tours, a lot of what we were looking at is like, do we like the environment? Do we like the schools? Do we like the area? Things like that. But don't forget to consider how much money that college has to offer for the career path of that child. That can make a huge difference as well.
There is that's one of the things that I found as well. You have to do a little bit of digging. But there is a lot of money available out there for students coming into college. There's grants, there's different scholarships available, and a lot of people don't even know about those. And unless you actually do your due diligence and look and try to find what's available, you're not going to. One thing, Nolan, you mentioned was late stage planning. So my daughter's graduated and she's applying for some jobs, and she's looking to move out of town. And she's very fortunate because she's looking to go to North Carolina, and she's going to have some moving expenses. And she was fortunate enough that Grandma is going to help out, which she's done with her other grandkids, and make a small contribution or donation to her, I should say, for helping with some moving, and she can use that money for whatever she needs, but she's going to put it towards maybe paying off some debt or getting her through this stage until she actually gets that job and moves to North Carolina. So it's never too late, and like you said, a grandparent wanting to help out, there's several ways to do so, and I can't say enough, make sure that you do your due diligence and find out what resources are available.
As Nolan said earlier, it's never too early. He started planning, 3 weeks old for Andrew. So it's never really too early, never really too late. There are obviously more options available to you in the earlier stages, but to know the ins and outs and make sure it is as efficient as possible, maybe sit down, speak with the team at America's Retirement Headquarters, figure out how to plan for your child or your grandchild's college education and how to fund that. Real simple, 419-794-3030 is the number. 419-794-3030, or you can go online, americasretirementheadquarters.com. I want to talk with the birthday boy for a little bit here. Cryptocurrency has been volatile, as volatile as the stock market these days. As a matter of fact, if you bought $100 worth of Bitcoin 6 months ago, it's worth about half now, and some of the other cryptocurrencies have fared much worse. Luna is now worth fractions of a cent as of last Friday. Does this present an opportunity to insert into a retirement plan, or is this part of the financial world still too risky? Andrew, your dad has talked many times about you being actively involved in cryptocurrency. So really quick, let's talk a little bit more about what you're doing and your involvement with that.
So what I do is I don't go more on the trading aspect of cryptocurrency. I'm more on the side of I build supercomputers that solve algorithms and are the ones that processes the transactions of everyone sending cryptocurrency, and I get rewarded for it daily. And that's two different complete sides of how to get involved with crypto. I would say if you're looking to get involved with crypto, the easiest way would definitely be trading. If you go on exchanges like Coinbase or Binance, those are the ones in the US that are the most popular, where that's where you can go in and you can buy Bitcoin, you can buy Ethereum, you can buy Dogecoin. And that is, I would say, the most easy way to get involved. Then there is the other side of the more technical, the more advanced side of, say, mining cryptocurrency, where that's where you build a computer that has higher end components where it's running those algorithms to solve and process transactions that you then get rewarded for.
So again, it's something it's a whole new category, something that's only really been in the spotlight for the past couple years. How do listeners get involved? And like I mentioned, one of them just went essentially belly up last week, kind of same sort of thing like you see in the market. How can people get involved, and what are some ideas on how to avoid a possible getting in if you are trading and finding out that it's you made a giant mistake?
I mean, I guess the one main thing my dad's always told me is you can't really lose money unless you sell. So that's kind of going to be the same thing with crypto. Crypto always goes up and down just like the stock market. So as long as you don't sell the cryptocurrency, you're not going to lose the money unless you sell it. So what I do is I'm not, like I said, I'm not actively trading. I mainly just hold it for the long run. So I'm looking at it for 5-10 years down the road where I'm expecting it to go up in value, where I can then cash out in a later time for much more than what I have now.
So let me ask, any of you, if you want to chime in, is this one of those situations where obviously this isn't when we talk about, you're going to need money for the immediacy, especially if you're using this towards retirement, if you're approaching retirement, Andrew, I dare say you're probably not thinking about retirement right now, but for listeners out there who might be wanting to get involved, this isn't something that they should plan to use in the next couple of years, but maybe down the line, they can use this as a kind of a hold and accumulation sort of vehicle. This is what this is probably more catered towards and not the entirety of their retirement plan. Is that a safe assessment?
Yeah, obviously, I think the whole crypto environment can be somewhat speculative, but there also can be other options and alternatives to take a look at and kind of walk you through those. But again, if you think about it, your opening statement was talking about how the cryptocurrency, like the stock market, really topped out about 6 months ago. Back in November, Bitcoin hit an all-time high of 68,990. And back then you heard people making predictions about it going to $100,000. So at that point was ultimately, like most investors, where they make the poor decision and they get in when things are at an all-time high with this expectation that it's going to keep going up. But it works a lot like the stock market. So now the price as of May 18th, Bitcoin trades at 28,998. So again, if we think about investing, again, if this is a category that you're listening to and it's something that has been of interest to you, I'd much rather look at buying opportunities at the 29,000 range versus buying at the $69,000 range. Again, when it comes to investing, you think of the philosophies: you buy low, you sell high. When Andrew was talking about some of the principles that I've tried to teach him over the years, as far as like in the stock market, you don't lose until you sell. But you also, in the crypto mining, you've also had to be careful about some of these fly-by-night, type coins that come out, because there are, almost on a weekly or monthly basis, new type of coin offerings. So,
Definitely.
something that I would tell listeners is to look at some of the major ones that are out there if you're going to consider those, like the Bitcoin or Ethereum, or some of the larger, more established ones that are out there. And I guess, I would throw it back to you maybe for a question, Andrew, is, there's probably maybe only 5% of the population that actually even understand cryptocurrency. So it's one of those things that's still, the infancy. And I know you and I went up to Ann Arbor and had met with a group last Friday, because even I wanted to understand more, even though it's something that, we've been involved with your mining rig for a while, but looking at getting more involved with it personally. But I wanted to meet some other people. So maybe just for a split second, why don't you explain to the listeners what cryptocurrency actually is?
So cryptocurrency is like a digital solution to be able to transfer money to one person to another through computer networks. Hence the mining. That's where the computers are solving and processing the transactions of everyone sending their crypto. And the other thing with it as well is it doesn't have a central authority. So there's no bank or government that is controlling crypto. It's all decentralized. And just an example, Bitcoin was the first cryptocurrency, and that started in 2009, and that is still the largest cryptocurrency that is available in the market right now.
Yeah, so when you talk about it, again, you can invest in the example of the Bitcoin, like he's talking about, some of these other cryptocurrencies that are out there. It can the other thing that you can do is you can do the mining solution, which is something that Andrew's doing. So your supercomputer is essentially acting as what I would refer to as the bank. It's solving those algorithms and processing the transactions. And so, how much revenue does that produce for you?
So it really depends on how much money you invest into crypto mining. The main component in building the supercomputers are the graphics cards. Those are at high demand and little supply. So it really depends on which cards you're able to get and the prices you get them at. Right now, with the amount of graphics cards we have running, we're making about $35 a day in rewards, and we're spending about $6 in electricity. So we're netting around, I would say, on average between the day, everything goes up and down in price, 25 to up to $30 a day in net profit.
Yeah, so think $25 a day for being
Yeah.
19 years old, times that by 30 days in a month. That's $750 for something that's working 24 hours a day, right? It just literally sits in our basement and processes those transactions too. So for those of you that are out there listening, maybe you've thought a little bit about crypto. Maybe it's something your current advisor hasn't talked to you about. Again, I would consider it to be more speculative. So if it wanted to be part of your retirement or investment plan, there are some ways that we can help you get involved in this. First and foremost, there are what is called ETFs, exchange traded funds. So, one of the drawbacks about crypto is, as Andrew pointed out, it's currently unregulated. So, it's almost like a little bit of the wild, wild west. So you've got to be a little bit careful in what you do from an investor standpoint. That's where you don't just listen to advice on a Facebook ad that you saw or social media. You want to do your due diligence and make sure that you have some things that have a little bit more protection. So the ETFs are exchange traded funds, and the exchange traded funds are a way to get some type of exposure into this category. And these are investments that you can buy from a custodian like a Fidelity, a Charles Schwab, TD Ameritrade. So you have it held in an account, and then it's much more transparent and much more, in my opinion, protected from what could happen in the unregulated market space. The second thing, I think, it's also something that Andrew has been involved in, and I've been involved in, and it's also in part of our portfolios, is looking at some of the companies that are building the equipment. So Andrew talked a little bit about how graphic cards are the major component of his supercomputer. And there's such a high demand for these graphic cards. These companies that are the graphic card makers, there's some of them that we look at that have billions of dollars of cash, have great net income, positive revenue. And that doesn't mean they're not subject to the wild ride in the stock market like we've seen, but these are companies that are benefiting. So tell us a couple stories about you, Andrew, in trying to get graphics cards.
Well, like I had said, it's in very short supply and very high demand to be able to get these graphics cards. And multiple times throughout my school year, this last, I would say last winter, I had actually stayed outside of a Best Buy for 8 hours and 14 hours just to be able to get 1 to 2 cards, along with probably 100 to 200 other people that are waiting in the line as well. That's just what we had to do to be able to get these cards because they're in such short demand of supply.
I think you made a good event out of it, though. Didn't you have like a grill and you guys barbecued? You had a TV out there. And
We did, yeah. We had a lot of fun activities there, and a lot of other people that were camping out there came over, and we all hung out.
Yeah, some of the good people that we got to meet actually last Friday when we went up to Ann Arbor. That's where we originally had met those people. So there are, also other companies. Again, if you think about the stock market, if you go back to supply and demand, there's still a huge demand right now for these companies that are making the graphic cards. And these are publicly traded companies, meaning that they're stocks that you can make an investment in these companies. And again, right now with the market volatility, in my opinion, there's been some great opportunities with the market to be able to buy some of these opportunities right now. There's also what's called the blockchain companies. So, again, if you don't want to go out and do the supercomputer, there's companies out there that you can invest into that are publicly traded that, do the blockchain technology that he was talking about that we have. There's also the server storage. So if you don't or you want to go into having a big operation, a big space, you need to put these supercomputers somewhere. So there's publicly traded companies that are server storage companies. And these places are, companies that you can invest into, whether you invest into the stock. There's what's called real estate investment trusts that own infrastructure type companies that are out there. The next area of opportunity to take a look at from an investor standpoint are the companies that are the holders of the accounts and where the exchanges are. So, Andrew, I think again, there's a couple of different ones that are out there, but one of the ones that you use is Coinbase. Coinbase, what it does is it facilitates the exchange. So, again, what you can do is you link it to your bank account, you can make a deposit, and then you can go on there and you could purchase whatever cryptocurrency that you want, and you can use that as an exchange. So, again, you think of like Charles Schwab, Fidelity, TD Ameritrade, these are exchanges. Schwab is a great exchange to buy and sell stocks from. There's companies. And some of these companies are publicly traded now that allow you to invest in them, and then they make a little bit of money from the buying and selling and the spread. Some of these companies have, again, some of the criteria that we were talking about before: billions of dollars of cash, rising revenue, good net income. So again, these are things that we've already kind of taken a look at. So good things that are out there, good companies, good options. You've got, again, from you as an investor standpoint, if this is an area that is something that's perked your interest, again, while prices are really dramatically low, it's worth a conversation, and that's what we're here for. And it is a solution that we can help you with and talk about if it makes sense to have it as part of your portfolio, and if so, what does that look like? Definitely an area I feel very comfortable giving you some advice on.
I'll add 2 cents. I'm the 5% that has no idea what this stuff is all about. And I hear the talk around the office, and I've looked into it and that, but I think it's quite impressive, Andrew, at your what I consider your young age to be this involved in this. And I will throw kudos to you, because we don't see that very often, where someone your age that is so involved in this and wants to make a difference and participate in this. So I think it's awesome. I'm the Medicare and health benefits guy, so I don't know anything about what you guys are talking about, and I trust you to help me understand it better.
And, if you do have questions about cryptocurrency, as Nolan pointed out, and how that could play into your investment portfolio, and it's perfectly okay to have these questions. Real easy. Call the number 419-794-3030. It is very similar to the market, having that emotional detachment, being able to look at this as a buying opportunity. You don't want to be the last one at the party and, say that you invested 6 months ago when it was at its all-time high. Finding that right balance, being able to have that discipline put into your overall strategy. America's Retirement Headquarters can help with that. 419-794-3030. Or online at americasretirementheadquarters.com. It's not just cryptocurrency. The stock market also seeing a lot of losses lately. Financial author Gary Kottbaum tells Fox Business it is the tech sector. Well, they're the ones that are pulling everything down.
Everything I'm seeing right now continues to state bear market. And as I put in my reports, and these numbers are stunning, 50% of NASDAQ stocks are down 50%. 22% of them are down 75%. So I'm worried there's more to go. You just take a step back, let it go through the process. It just looks like to me we're not done yet.
So there again, hang in there. It'll come back. Now, statistically, that is normally true. That may be the case. But why is that message not very comforting for people that are on the verge of or even in retirement?
I can imagine it's not comforting, I think, for anybody. I mean, even Andrew is a young guy saving and investing for the future. In his case, it doesn't feel good probably when the market goes down either. But in the reality is each and every month by participating in the 401k plan, he just gets to get more shares as the price is lower. And so those, returns for long-term investors and short-term market movements don't matter a whole lot. But, the challenge is as you get to retirement time, you don't have the luxury of time to make up for those mistakes.
So there's just not enough time. Andrew's 19 now, and I'm 60. I don't have that time that he has to hang around and see what's going to happen. If I'm contemplating retirement here in another 3 to 5 years, I'm concerned about it. I'm committed to 10 years, so I've got a little bit more time than someone that's 65 and already in retirement. There's concern. I mean, there's concern on everybody. it doesn't matter, like you said, Nolan. It doesn't matter whether you're 19 years old or 65 years old. Everybody's concerned right now.
Yeah, I think being a financial advisor for the past 28 years, it's time like this that is where I really try to earn my paycheck because
Absolutely.
this is the time where it's a good idea to have a conversation. The first thing is I don't want you to make an emotional decision. So, I mean, if you missed our shows in the past, we've talked about this topic. There's some great information that we have talking about inflation, not being an emotional investor. Buzz on over to our YouTube channel. Just type in America's Retirement Headquarters. If you haven't yet subscribe to our channel and take a look at some of those past ones. We'll get you through this together. So, first of all, take a deep breath, right? Don't make a mistake. History doesn't always repeat itself, but it oftentimes rhymes. The markets on average have pullbacks, right? It's maybe every 4 years you see a 20% pullback. Every typically year you see, some type of 10 or so type pullback. So we're in kind of the range of returns. So the $1 million question is more bad news coming? So kind of like that clip that they were talking about, what does the future hold and how much volatility can you take? So as Andrew pointed out, in cryptocurrency, you don't actually lose until you sell.
Right.
So the first thing is take a look at your risk profile. And, it wouldn't be surprising that more people would be answering questions of much more risk adverse today than what they would have answered a year ago, right? When the economies and the markets are doing well. But, really try to take a look at what your risk profile is and then evaluate where your portfolio is in comparison to that. Then, what I would tell people to do is I'd tell people to make, changes by taking steps. So not making dramatic moves. So oftentimes, what you would see is you could see an investor who would sell everything and get out of the market when the market's at an all-time high. And then what they do is they wait until things get better and then miss the opportunity.
Sure.
So we have an investment committee meeting each and every month. And in our investment committee meeting that we did this week, I mean, we spent pretty much the entire day talking about the things that we own, why we own what we own, what's inside of the portfolio, and looking at making changes. So if we look at, this year, what's interesting about this year is it's not only stocks that are down, but bonds and really almost the majority of asset classes are down so far this year. And a lot of times, if you think about it, we talk about diversification. Usually stocks go down, bonds go up, and vice versa. This year you don't see that. In addition to this year, if we look at the term standard deviation, again, I'm a numbers nerd. It's just, the business that I'm in. But if we think about the standard deviation in like a general bond fund is maybe normally 4. That means it could move up or down 4%. Mm-hmm. What we've seen this year is like the standard deviation, even in some bond funds, is at, a 3 standard deviation, meaning that they're moving at 10 or 12%. So bond funds are under deep pressure because of rising interest rates and the Fed's policy and what the outcome is going to be on that. In my opinion, equities have historically bounced back faster than, say, bonds do. So, one of the things is there may be better options for bond funds that are out there. That could be an area where maybe you take some steps to the left and make some changes and don't abandon ship. After you get your portfolio analyzed for risk and take a look and see where it lines up, again, what you want to do is you want to go in and selectively pick out where maybe some of the higher risk areas are, looking for ways to kind of reduce risk. There are, in addition, there's what's called tactical parts of the portfolio. We incorporate some tactical strategies overall in a portfolio. And so what tactical does is tactical would when technical indicators turn negative, actually take you out of the market. It could move you into things like cash. Mm-hmm. So we were working with a gentleman just earlier this week, and we were looking at his 401k. And, since April, it's been giving him, and our technical indicators have been giving him some guidance to say, hey, for 40% of your money right now, let's just park it on the sidelines. So if you don't have circuit breakers, you don't have safety nets in place, and heck, you're not hearing from your advisor and you just don't know what the plan is, I'd love to have a conversation, and our team would be more than happy to kind of share some knowledge with you. Absolutely, if you're listening and you're a client of ours and you feel a little bit of a concern, pick up the phone. We've got dedicated time and advisors available to talk to you. But even if you're not a firm, a client of the firm, if you're just a listener to the show and you need to talk, we're here to listen, and we can kind of help you get through this. The other thing that we've been doing, Scott, is we've been going on the offensive, right?
Mm-hmm.
So think about this. How would you like to save 20, 30, 40, 50% in taxes?
Well, amen, brother.
Right? No brainer, right?
No brainer.
So for years, what we've been talking about is how tax rates could go up in the future. So for those of you that are listening that own like a 401k, a 457, a 403b, or a traditional IRA account, what you're doing is you're deferring your taxes to later on in the future. And you're saying at some point in the future, I'll pay taxes. And of course, at 72 is when you have the required minimum distributions. Mm-hmm. But that doesn't mean that you can't choose to pay some taxes now. So if you have some great stocks that you love that just so happen to get abused by this market recently, and if they're down 20, 30, 40, 50%, now from a tactical standpoint, could be an incredible opportunity for you to take and convert that money from a traditional retirement account, pay taxes while that stock price is lower, effectively paying taxes on half the value, saving 50% in taxes, convert it over to the Roth IRA. Now, again, if you follow the rules of a Roth IRA in 5 years till 59 and a half before you access your profits, all those profits, if that stock comes back,
right,
all those profits are now tax-free.
Sure.
But by doing nothing and not looking at it, and that stock comes back in price, now your tax bill just went back up.
Exactly.
So tactical Roth conversions is a great opportunity right now. So again, for those of you that are out there that are worried about the losses in the market, when is the end coming? That's a common question. Short term, that's something that you and I and nobody has control over. I mean, if you look at the news, anybody's willing to give you a prediction. I would say that what I have seen is the market has been absolutely abused. I'm not saying that end is here yet. What I'm saying is it is an opportunity where you have some buying opportunities. So for myself personally, with my cash, I started to put a little bit of my cash to work, but I've saved some cash back. So if things get worse, I'll put some more cash to work. So it's kind of called dollar cost averaging. So you dollar cost average into this type of environment. Just the same as risk reduction, you don't just bail out of the market and take losses and wait till things get better. That's a poor strategy to have. So this is the environment where you need some guidance. And again, we're here to talk to you. And, at the end of the day, sometimes doing nothing is okay. People, I think, in this environment, they want to change their investments because they feel like they're out of control, right? Because I can't control the stock market, right? Even Washington doesn't control the stock. There's nobody that controls the stock market. So investors want to change because they feel if they change, they're putting themselves back in control.
Yeah, they're doing something, and doing something to them, it's kind of like, buying a car, or you negotiate a price, and if you get $50 off, you feel like you won because you negotiated and they gave you something. Nolan, I do have a question for you. I met with a client a couple of days ago, and a single woman with her Medicare issue or questions, and she says, I've been a pretty aggressive investor over the years, but now that I'm 65, I'm kind of backing off of that. So when somebody comes to you and says, I like to think that I'm an aggressive investor, and then the market starts to go crazy like it is right now, how can they sit there and really complain about it? Because they told you, this is my habits. I like to be aggressive because I can afford to do so, but something's got to happen. I want to move to the sideline or something like that. I mean, you're either aggressive or you're not. I mean, you got to run into that a lot. How do you talk to people about that and say, hey, I'm aggressive. I don't care if the market goes down. I'll just write it out. And then they start complaining when it does go down. I mean, at some point, you've got to compromise there.
Well, I mean, I think there's a lot that goes into that, right? So the word aggressive may mean something very different for me as
Right.
to you as to, maybe a 70-year-old, right? That definition of aggressive is a challenge, and it's not until we have an environment like this that you
Right.
really learn that that definition of aggressive means two different things. So
Right.
that's why, again, I think the software that I love that we use at our firm called Riskalyze is a way that an investor can go through, and it's almost like an eye doctor. So it asks you, do you like this investment better or this investment?
Sure.
This investment or that investment? This investment or that investment? And then really it's trying to get you to that 20/20 clarity that says what you really are as an investor. And in using that risk score, again, it measures anywhere from 0 to 100 to figure out what your risk score is. So I just had gone through this exercise recently with somebody this week. And with this gentleman, the way he came back and answered his risk score was at an 87. So again, 0 is put all your money in the bank, no risk. 100 is probably Ando's cryptocurrency, right? Ultra high risk.
Right.
So he's close to, he's just a couple of years out from retirement time, and he's a risk score of 87. So, what that did is that gave me an opportunity to have a conversation that says, really, are you an 87? If your money doubles, what would you be doing differently in life, right?
Okay.
If your money gets cut in half, what does that mean for your retirement?
Sure.
Obviously you'd have to work longer.
Mhm.
So we had a conversation, and I think about like an 87. I oftentimes, Chaz at our office describes it very well. It's kind of like how fast your car is going. So at 87 miles an hour, if you get into an accident, it can be a deadly accident.
Sure.
An investor going 87 miles an hour, if the market crashes, it's very painful. It can be a deadly accident. But what's interesting is with some of the solutions, against some of the solutions that we offer, I know we have some great solutions. I look at it like a gas pedal. So the solution that we came up with for his plan is we had a gas pedal. So when everything technically looks good and, we say all systems are go, we're pushing that gas pedal down to
Sure.
an 87 that says when things technically look good, here's the recommendations on how to invest your 401k to try to be the most aggressive. At the same time, when conditions deteriorate like they have been over the last several months, we're backing off that gas pedal, and we can bring them back down to like a 35, 40 miles an hour.
Sure.
So again, at 35, 40 miles an hour, if you get into an accident, is it bad? Yes, every accident's bad, but it doesn't necessarily have to be a deadly accident at 35 or 40. And the nice thing is he didn't realize that he could be in the aggressive category, but he didn't have to be aggressive all the time.
Right.
He had the ability to be somewhat adaptive to the market conditions, utilizing some of the approaches that we put in place and gave him some guidance on. So we do give advice on 401ks. So if you have a 401k, a lot of times I hear people say, well, I got my 10 minutes at the lunch so once a year that the guy came in and gave the overview, and or I asked my neighbor, or I asked the boss what he was doing with his choices, or I just picked these because they looked like they were doing good. If you have a 401k, what we can do is we can give you guidance on your 401k plan and kind of lean over your shoulder and help you figure out maybe what would be the moves to make. Again, just like this example of the gentleman who didn't know those options were available, we were able to kind of show him what those choices are too. So a lot of things can be done in those situations. Then it's also a matter of figuring out the time frame. So one of the things that we've created is called our independent income system. Within our independent income system, it's our methodology, philosophy, and belief of how to put investments together for somebody that is close to or in retirement time. Somebody like Andrew's age, if the market is volatile, it doesn't really matter so much.
No.
Again, like I said, it doesn't feel good, but it's not that big a deal if you don't need the money right now. The same would be true for a retiree, actually. Mm-hmm. So if a retiree had money set aside to cover their living expenses for, say, the next 5 or 10 years, and their stock market money they didn't need for 10 plus years down the road, mm-hmm. then what's happening right now, it's not really a panic situation.
Right.
It becomes an opportunity situation. And again, history has proven the people who don't panic but look for opportunities are usually the ones that get most rewarded.
Again, it's all about being able to know that it's not an all or nothing situation when it comes to your retirement. You don't need all of your money in the market. You don't need to think of all of your money as money you're going to need for the next 5 years, the next 10 years in retirement. You can compartmentalize it. You need to have a proper strategy put in place. And that is something that the team at America's Retirement Headquarters, they pride themselves on. They've been helping people get to and through retirement combined, 40, 50 plus years of combined industry experience at this point, Nolan?
Yeah, I mean, if you look at our entire team that we have here, between all of the advisors, we've got 100+ years of experience and multiple professional designations and college degrees. We're here for you, absolutely.
And again, I want to echo what Nolan said. If you are nervous about how the market has been performing lately and your advisor or your financial planner has been kind of absent or hard to get in touch with, America's Retirement Headquarters, real easy to get in touch with. Pick up the phone, give a call, 419-794-3030. Whether you want a second set of eyes on your plan, whether you want to create your plan, whether you have questions about crypto or anything that we did or didn't talk about on this week's show as it pertains to your retirement, real easy to get in touch with. 419-794-3030. Always available online, americasretirementheadquarters.com. I want to thank you for spending part of your day with us here on America's Retirement Headquarters. Please have a great week ahead of you. Andrew, one more time, happy birthday to you. And guys, as we wrap up, I want to leave you with the final word.
Well, I want to thank Andrew for joining us today. Nolan, a great show, a lot of information. If you are a grandparent and you've got a grandchild headed off to college, prepare now. And don't worry, if you don't prepare now, you have an opportunity later to prepare.
Yeah, have a great week, everybody. Again, we're here for you. If you've been listening for a long time and you're worried about the markets, you want to learn about crypto, or if you have somebody that's going to be going to college sometime down the road, pick up the phone, give us a call. We'd love to talk. And until we meet again, stop over to our YouTube channel. Again, type in America's Retirement Headquarters. Lots of great resources to help arm you in today's environment.